All right, well, let's get started. Hello and welcome to the DSM Forward Ask the Expert series. I'm Mike Caldwell with the Greater Des Moines Partnership. The series is presented by the Greater Des Moines Partnership as part of our DSM Forward initiative. And our goal with this is to help business leaders connect, share, exchange ideas and information as part of getting our businesses reopened and going. Partnerships published a series of industry playbooks, FAQs, and other resources that are available to you. You'll find those at dsmpartnership.com/dsmforward, and that link is on the screen that you're seeing right now. I encourage you to take a look at that information and reach out to us at the partnership if there's anything we can do for you. I'm joined today by Dave Hogue, Senior Tax Partner with LWBJ LWBJ. I keep wanting to add to that. I'm sorry, David. And Michael Tretton, Director of Audit Services. So before we get started, I'd just like to ask everybody, if you would, mute your microphones. It makes life a lot easier for all of us. If you want to turn off your video to save bandwidth, that's great. Most importantly, open up your chat window. We're going to use that for the Q&A today. And we want you to go ahead and start entering your questions as you have them. We held this a couple of weeks ago, and I think we had 60 solid minutes of questions. And that is really the goal of today, is to answer your questions. So we're going to have Michael and David start off with some general information, and then we'll be opening up for Q&A. So with that, Michael, I think I'll turn off my slide share. And we'll start with having you kind of give us an overview of where things stand.
Sounds good. Thanks, Mike. Good morning, everyone. I wanted to start off with some kind of highlights, I guess, of things that have happened since our last discussion, probably about a month ago. And then we'll turn it over to questions. So just to start, just to talk very high level about timeline, the PPP program is still open. Applications will be accepted through June 30. Time is definitely running out there, and I think most people that have would like a PPP loan, have it, but there is still some time to apply. There's a little bit of confusion on maybe the website or the invite, but that's the June 30 date is just related to applying for the initial PPP loan. As far as the timing for forgiveness, we'll talk about that here a little bit as we go along, but it's sort of going to depend on what sort of time frame, when you got your loan originally, what sort of time frame you're looking at as far as calculating your forgiveness, and then also a little dependent as well on your lender and kind of where they're at in the process. So we'll touch on that a little bit more here as we go along. As far as some pretty significant, I think, milestones here over the last several weeks that we wanted to touch base on. First, the Paycheck Protection Program Flexibility Act was signed on June 5th by the President. Some pretty significant changes to the PPP program, and just wanted to highlight a couple of those changes here first and foremost. First of all, it gave an option to move from an 8-week covered period to a 24-week covered period. That was a pretty significant change. Obviously, that changes the how much payroll costs and other costs potentially would fall into your forgiveness application. So that was a pretty significant change. As far as if you had applied for a PPP loan before June 25th, you've got kind of an option of whether you want to use the 8-week or the 24-week period. Those are kind of the two options, one or the other. And I believe after June 5th, if you applied for and received your loan after June 5th, you're pretty much locked into a 24-week period. The other significant change from the Flexibility Act was related to the payroll cost percentage. So under the previous rule, there was a 75% minimum of payroll costs that needed to be included in the forgiveness application. the Flexibility Act signed on June 5th changed that percentage to 60%. So did provide a little bit more flexibility. There was, the way the law is written, there was maybe a little concern that if you didn't meet the 60% requirement, that it was a hard cliff, in that basically if you didn't meet the 60%, that forgiveness would be zero. But some guidance has come out here in the last couple of weeks that clarified that it follows kind of the similar formula as it did under the previous application. And so based on headcount and salary and wage reductions, you still can receive partial forgiveness if you don't meet that 60% payroll threshold. The other significant item of note that I wanted to mention is that in addition to the original forgiveness application, which was amended following the Flexibility Act to incorporate the guidance related to the 24 weeks and the 60% payroll coverage, there is also now an easy forgiveness application that's available. And that form is really intended for, or you're eligible to use it. One, if you're self-employed, independent contractor, or sole proprietor, that's probably your preferred method to use for the application or for the forgiveness. The other thing that does is that if you're able to make kind of an upfront assertion that I did not have any changes or decreases in FTEs, or saying that I did not reduce salaries or wages for any of my employees by more than 25%. If you can make those assertions, it takes quite a few calculations out of the forgiveness application and makes it quite a bit more straightforward. So that was a welcome improvement here over the last couple of weeks. I think those were the main things that I wanted to touch on. If there's questions, we would be happy to answer any of those. Otherwise, I can talk a little bit more about the easy application and just overall kind of the FTE and wage salary reduction changes. So
yeah, I think, Michael, I would say let's go ahead and I know, Dave, when you and I chatted yesterday, and I believe, Michael, you did too, there was 3 or 4 major questions that you've been hearing quite a bit. And as we're waiting for people to put their questions into the chat box, if you want to just kind of take some of those and take people through, what are those, the common questions, and
sure,
and what's the right way to go?
Yep. So probably 2 of the more complicated, in my view, the complicated calculations were related to the FTE reductions and the salary and wage reductions. And so just to talk about those here a little bit, what the forgiveness of the application is asking you to do, if you can't assert that you didn't have a decrease or change in FTEs, what it's asking you to do is look at your average FTE during the covered period and compare that to a couple of different prior benchmarks. And so, there's a couple of things to maybe dissect there. The first is, as far as this covered period. So, based on the way the application is written in our current understanding, the covered period is going to depend on the 8-week or 24-week period that you select. And so there is kind of a requirement to look at your FTE over that entire covered period. How the rules are written is looking at the FTE hours that are paid for each of the weeks for each employee in your covered period. And so, that does, I think, the 24-week covered period, if you're going to use that to cover some of your payroll costs, or need that to cover your payroll costs, that does add some complication to the calculation, because you do need to look at your FTE over that entire 24-week period. Now, there is a practical expedient, or kind of a shortcut that you can use, where basically you would assign either a 1 to all full-time employees and a 0.5 to all part-time or less than full-time employees as kind of a shortcut method. And if you're, depending on your business and how, your people work, that might be a good way to, for you to know, like, hey, I have the same number of people, but maybe they worked, a few hours more this week and a few hours less this week. By using that 1 or the 0.5 might be a good way to simplify that calculation. Otherwise, I think what it's really asking you to do is look at their average over that entire payroll period, and the intention is to try and uncover if you really have reduced hours, beyond or significantly compared to some of these prior periods, that would indicate that you might need to have a reduction in your forgiveness amount. And again, under the easy application, basically all of that kind of legwork and calculation, which is in the long form, is included in the Schedule A and the Schedule A worksheet. If you use the easy application, basically all you have to do is check a box to say that I've met those requirements. Obviously, you want to be able to substantiate that, but as far as pulling the application together, there is an easier way to do that. Dave, anything else that you wanted to add on that related to FTE?
No, I think that was a good, simple analogy about it. FTE is by far still the most complex piece of this loan forgiveness application. And I think that will be the one issue where a lot of people will have to work through both examples, either the 8-week covered period or the 24-week covered period, to decide which is most beneficial for them, what period to elect. And again, like Michael said earlier, if you receive the loan before June 5th, you can elect either period. After June 5th, you're stuck with the 24-week period. But that is by far and away going to be the deciding factor of what period you select, and can you exhaust all your proceeds if you choose the 8-week period, or have you exhausted all your proceeds?
Yeah, I've had at least one client that, based on the initial application and their understanding, they, I think, kind of made things work for 8 weeks, but have had to make some, had some serious discussions here after the original 8-week period, but they're sort of trying to figure out, well, which is better? Do I maybe not meet the payroll threshold for the first 8 weeks, but now I've got, FTE reductions, after 8 weeks. So there are some things to think about, definitely, with, the difference between the two options. But again, June 5th, and I'm not aware of very many people obtaining loans after June 5th, but if you have, you do sort of, you're put into the bucket. So.
The other, and getting back to your comment, Mike, probably the other question that I've been asked the most right after the FTE question is, when can I apply for forgiveness? When is the forgiveness application due? And the first point I would make is talk to your bank, because I know in talking to about a half a dozen banks in this area, most of them have no clue when they're going to start accepting applications. They're just kind of been waiting to be told that, okay, now our application process is open. As far as the SBA guidelines go, they just say that you can apply for loan forgiveness after your covered period is up. So if you choose the 8-week covered period, then you can apply as soon as that's up. Likewise, if you're going to elect a 24-week covered period, then as soon as that's up, you can apply. If you notice on the new applications, if any of you looked at them, Michael pointed this out to me today, they actually say they expire October 31st, 2020. And really, all I can think is that is probably 24 weeks after June 30. So they assume that would be the latest that the 24-week covered period is up. The SBA guidelines that came out June 16th also have a new paragraph in there in that you have 10 months after your covered period is up to apply and still be able to defer any principal or interest payments until you are notified by your lender of how much of the loan is forgiven. So, for example, if your 24-week period is up October 31st, you have 10 months to apply, and you still don't have to make any interest or principal payments until your lender receives word back from the SBA how much is forgiven. If not all of it's forgiven, then at that time you would start making payments on the remaining unforgiven piece. If you apply for forgiveness after 10 months past the expiration of your covered period, then you immediately have to start making principal and interest payments on your PPP loan. PPP loan, yeah. Just make sure I got enough P's in there. Even while you're waiting to hear if any of it or all of it's going to be forgiven. So the general answer is A, check with your bank. B, as soon as your covered period, whichever one you elected is up, fill out your application. And C, make sure you submit it within the next 10 months from that expiration of your covered period so you can defer making principal and interest payments. Once your loan is forgiven, then the interest that is accrued is also forgiven in addition to the principal payments.
All right, well, we've got a couple questions in. So Michael, do you want to just go ahead and read these and take them as they come between you and Dave? Does that make sense?
Yeah, we'll do that. So the first question I see there is from Megan. Megan, I think hopefully Dave just answered that one. So if not, feel free to type in some additional questions there. Another question that I got privately, does not allowing overtime during this period equal a reduction in wages? It wouldn't be 25%, I don't think, but I haven't done the math yet. I don't know, Dave, do you know the answer to that one off the top of your head?
As far as the calculation of more than a 25% decline in wages or hourly rate or hours, no, I don't know. I mean, your full-time equivalent people you'd still meet your full-time equivalents. But as far as amount of wages paid, I don't know. Again, you're comparing it back to the previous period where you can elect, a period in 2019 or just early 2020. So I think you'd want to choose which comparative period you would use. And if you had similar overtime or overtime in that period compared to, I guess I don't know for sure.
Yeah,
that's
just
one that we'd need to check out and get back to you on.
Yeah, just reading the easy application, it does say, so it says the borrower did not reduce annual salary or hourly wages of any employee. So I think if you're, if the hourly wage has stayed consistent, just not allowing overtime, the issue that you'll run into is probably more on the payroll side, but now with the 24 weeks, that potentially would get you covered. So, so Joanne, if that answers your question, that's good. If not, feel free to shoot Mike a follow-up email, and he's got our contact information, or it was at the beginning of the presentation here, and feel free to reach out to us, and we'll see if we can help you out more. Next question, does the $10,000 EIDL advance have to be repaid if not needed to pay for business expenses? And Dave, I'll kick this one to you, but I think before I do that, to start, in general, the EIDL loans do need to be repaid in general. And the other thing that I do know is that your intention is to use that for things other than cost covered by the PPP loan. So I would, other than payroll, utilities, and mortgage interest, that's the intention for the EIDL loan. So those would be things like insurance or, transportation costs, those sorts of things. Dave, anything else that you want to add to that?
Yeah, the EIDL loan advance was an emergency advance, $1,000 per employee up to $10,000 when you originally applied for the disaster loan. Originally, the SBA came out and said that if you receive this advance, since it was not required to be paid back if you never received the disaster loan, that it would reduce your forgiveness from the PPP loan, and that's why you had to list the advanced amount on your original application and your EIDL loan number. The new applications for forgiveness came out, and nowhere on that loan application does it mention that you have to reduce it. It doesn't show it in the calculation. You still have to list it, but it doesn't show that you have to reduce it from the amount of forgiveness. The SBA in these interim final rules version 3, though, it does say that proceeds from any advance up to $10,000 on your EIDL loan will reduce the amount of your PPP loan forgiveness. So if you receive that advance and it does not have to be repaid because you didn't receive the EIDL loan, then yes, that will reduce your PPP loan forgiveness. So in essence, yes, you do have to pay it back.
Okay, next question. Is the impact of FTE and wage reductions reduced for borrowers using the 24-week period? And so I'll start with the FTE side, and I think that the short answer is yes. The way the application works is that you're looking at average FTE over various periods of time. And so if you were to look at this 24-week period, and basically the longer you can keep your FTE up at your normal capacity and reduce it, the less you can reduce your FTE, the way I think the math works is it will have less of an impact over a 24-week period versus, maybe at this shorter 8-week period. So that's, I think, from the FTE side, the longer you can keep them in your FTE, they're going to bring up your average over that entire period. And so there should be less of a reduction. The wage reduction is a dollar reduction, and it does cover multiple periods of time. So I'd have to probably think about that one a little bit more, but that one, the math on that one may not work quite as well in your favor as the FTEs, based on, if you do have changes in, or, wage reductions during the covered period. So follow-up question from the first one. Our bank is accepting the forgiveness applications now. We have spent all of the money we received on forgivable expenses, so it seems like we should go ahead with the application, but I'd appreciate your opinion on any potential downsides to going forward with applying for forgiveness now. And I don't think there are any. If your bank will accept the application and you've worked through it and you've got full forgiveness, I don't think that, in fact, I would say it probably is good to apply now and get it forgiven. I don't think anyone will claw back. If some rules do change down the road that make it less enticing, I don't think that they're going to claw back on your forgiveness. And I would add too that, throughout this entire process, the PPP loan program started at the beginning of April. Every time there's been, new guidance or an announcement, it really has been helpful from the perspective of, the borrower. It's in general, things are getting easier. They want you to get this money forgiven as long as you meet these criteria. So I don't think that there's a downside to applying now if you're able to. So Dave, I don't know if you have any other.
No, I would agree. If you've met all the requirements and you know that from your calculations that 100% of it's going to be forgiven, I would apply as soon as you can. That way you can get it forgiven. You can get the liability off your balance sheet. And then you just have to wait for the outcome of whether or not those expenses that you paid with the PPP loan proceeds will ultimately be deductible on your taxes.
Michael, I put a link out there to the best practices document your company put together. Can you just briefly let people know what that's about?
Yeah, this is it's been a document. It's only I think a page and a half, and it's really just meant to really focus on the highlights of things you should be thinking about here as the forgiveness has become top of mind and as the rules have changed. This is a spot to just kind of check, am I doing the right things? So it gives some very high level guidance on kind of some of the information that you need to pull together, how the forgiveness application is going to work, and a few other things there. So I think probably the one recommendation that we have in there that we haven't mentioned yet on this call is if you do have questions, reach out to your banks, reach out to your service providers or the people that helped you with the application in the first place. They've probably got some other information if you do have questions, or they can help you, kind of just work through some of your numbers, your math, and get you comfortable that, if you think you're on the fence of forgiveness or you're going to have some impacts of forgiveness, it would be a good exercise to reach out to those that have helped you along the way so far, and just kind of take a temperature check on how things are going as it relates to forgiveness. Dave, this one's for you, so all ears. Can a borrower delay tax effect of forgiveness to 2021 by using 24-week period and waiting until after 12/31/20 to apply for forgiveness?
Well, I would say yes. If you elected the 24-week period, again, you have 10 months to apply after that covered period date has come. Actually, you can apply at any time after that, but the key with the 10 months, like I said earlier, is it allows you to continue to defer principal and interest payments until you know how much is forgiven. From the tax rules, if the law doesn't change and the IRS is successful in upholding their position that expenses are non-deductible, since you get to the end of the year and you do not know if any of that loan has been forgiven yet because you haven't applied, then tax law would dictate that you can deduct those expenses. The downside is once it is forgiven in 2021, then there may be a requirement that you'll need to go back and amend 2020 tax return, which if you owe tax, you'll also owe interest on that. So you could end up paying more by delaying it, but I do not see any issues with taking the position that since you haven't heard that any of your loan is forgiven, that you can go ahead and deduct those expenses if that's still the current tax IRS is taking.
All right. Well, Michael, David, it looks like we've run out of questions. Anything else you guys want to add before we wrap this up, unless somebody jumps in with another question?
I had one thing that I was just going to mention if any of you deal with also kind of the financial reporting side of this, I think there's two views that we've been dealing with as far as how to account for these transactions. So from the book side, not necessarily the tax side. One option would be to call this a loan, which I think is, obviously very supportable. You filled out a loan document, and if it's not forgiven, there's payments that would be coming down the pipeline, et cetera. So you would call it a loan upon receipt, and then, really once you submit that application for forgiveness and it's accepted, you would consider that basically some form of other income or income into your financial statements. The other view that we've heard, and I think is an acceptable approach, is really to consider this a grant from the U.S. government. And so from that perspective, you're receiving the money day one, and there may be some, deferral period as you're earning it, but basically by the end of the year, if you've spent all that money and you feel that it's all going to be forgiven, you could call this a grant. And we've also know of several clients that are planning to go down that path, and we believe that's an acceptable approach as well. So for any of you that deal with the financial reporting side of the house.
I'll just add too that the state of Iowa, they recently, the House and the Senate passed an omnibus tax bill. I actually have not seen if it's been signed by the governor yet. They did this on June 16th, so my guess is it probably has, but they've also followed along with the exclusion of any PPP loans that are forgiven from income. So they are also treating it, any forgiveness, as tax exempt income. Now, importantly, the bill does not say they'll couple with the Internal Revenue Code. So it appears, at least on Iowa's tax law, that there is no question that this loan proceeds that's forgiven will be tax exempt income, and the expenses will still be deductible. As far as an update on where we're at on the federal side of that, the bill that has been introduced to state that not only is the forgiveness tax exempt income, but expenses paid with the forgivable proceeds are deductible, is in the Senate right now, wait and vote. Don't know if they'll get to it before they recess here in early July. But if they do not get to it, I can guarantee you we've been told that it will come back up in the fall. So the key will be, if you're a fiscal year taxpayer that receives notification of forgiveness prior to the end of your fiscal year, you may have some decisions to make as far as extending your return, waiting outcome of that bill. How does it affect your financial statements? Do you follow current tax law and not deduct the expenses, or do you delay filing your financial statements to treat those expenses as deductible? But anyway, so that's where we're at on the tax side. The federal is still questionable, but a bill is on the Senate floor this week, and Iowa has agreed to treat it all as tax exempt income, and expenses are deductible.
All right. Well, I want to thank you both very much for joining us today. Thank you to the participants. We'll share this information on our website after the fact and have the video replay available. Also remind you all about the playbooks that are available and the other content at dsmpartnership.com/DSM-forward. Michael, David, and everybody at LWBJ, thank you for doing this. We appreciate it. And with that, I'll end the call. Thanks,
all right.
everybody.
Thanks, Mike.
Thanks, Mike.